Hey guys and girls, Nathan here. Welcome to this week's Tuesday night live. Just waiting for my screen to come back. And here we are. Um, Lots of things happening out there. As I went on to live, the screen disappeared and I've got heaps of emails coming through. So yeah, lots of things happening out there. Uh, Today, guys, lots of news articles. I think everyone loves when I start throwing news articles around and looking at what the media has to say about things. Today, I think I'm going to be keeping it a little bit tamer. I've got a lot of information to go through. So yeah, I've got a list of little topics that I want to talk about as well today, and I'll be covering off that shortly as well. So today, I want to talk about how is now a smart time to grow your property portfolio. So that's the second half of today, and the first half is obviously the news. So I want to get into one of the first topics, which is news that just came out in the last sort of 48 hours. This one here is an article, I don't even know where it's from, but it says industry identifies risks around the shared equity scheme. So basically, if you've been not watching the news for the last 48 hours or so, the Premier of New South Wales, the Dominic Perrottet, has given the green light. And it's quite funny because when I first heard of this, I thought that's the Albanese plan that came out. But no, it was a plan that came out from the New South Wales state government to put out a stimulus package to the Sydney housing market or the New South Wales housing market. As a part of the package, the New South Wales government is investing $780 million in a shared equity scheme that will cut the cost of home ownership up to 40% for as many as 3,000 Australians per year. So when you look at that, it's not much, but here we are with, the Premier of New South Wales coming out and identifying that he's, going to give a shared equity scheme, right? And for most, it would sound like a stimulus package. It would sound like a good thing, but when you look at it, there's very scary parts to this, right? So, in short, what the government is proposing is that they will, if you're going to go buy a property, and this is only towards frontline workers. So if you're a teacher, a nurse, or a police, singles aged over 50 and single parents with a child or under 18 years can apply, contributing just 2% deposit. So if you're a doctor, a nurse, a teacher, you can now go and apply to get a property purchase where the government will own 40% of it and you buy 60% of it, and therefore you will only have to put down a 2% deposit of that property. Alarm bells ring for me, right? As I see everything that's happening out there in the world that we live in today. We've got, the government owning half of your property. Just think about that for a moment, right? For those of you that have been following the World Economic Forum, Klaus Schwab, and you'll own nothing and be happy. The government now owns 80% of your property. They always had a right over your property, but this time it's gone to the next extreme where they're actually owning co-ownership. And I guess, for those that are taking up the scheme, it would be very scary to be in ownership with the government. It's interesting, nevertheless, but I think from me being on the opposite side of it and owning all these assets, the benefit that I see is that we've now got a stimulus package in the economy, 3,000 people in this program of it, which could not have bought a property beforehand. All they have to do is put down a 2% deposit. So what's a 2% deposit of a 500 grand property? That's 10 grand they have to come up with. Or if it's $1 million property, you only have to put down a deposit of $20,000. So very, very small barrier of entry. What that does is it creates more buyers into the market and therefore a pent-up demand, and that'll also flow into the markets. It is limited to only 3,000 Australians, but there's still 3,000 people that weren't in the market beforehand that can now participate in the market because the government's given them a handout. So that's one angle of it. That's only a state-based model of this. We haven't looked out the the federal government one, which is where Albanese came out and he said that he would be offering the same sort of package. So if that's a package that would be handed down from the state government and from the federal government, that would see most Australians being able to access 40% co-ownership with the government, meaning that the government is now coming in and buying up all of the properties, and you guys that are buying at 60% ownership of the property would be inflating the already inflated property market, right? So always try to look for, what is the next bubble, what is the next Ponzi scheme that's going to be laid on top of the system. And I think here we have a good chance of a Ponzi scheme. Just going to read this again. The New South Wales government is set to unveil a $2.8 billion housing package, including a plan to reform stamp duty in Tuesday's budget. So we've seen 780 million go into co-ownership. And when we go and look at the plan of attack for stamp duty, we've got the second stimulus package, which I don't know if I've got an article here for that or not. I don't think we've got that here. But in short, what has been announced is that the New South Wales government will be abolishing stamp duty. So a lot of people will be going, yeah, I don't have to pay stamp duty, blah, blah. But what that means is that you've now got an annual tax. So from looking at some numbers when I was calculating and trying to get a bit of an understanding, basically you'll be paying off your stamp duty over 10 years. So in one aspect, you have got a purchase, let's say you buy a property for $1 million, you would have to put down a 20% deposit, 200 grand, and then you'd have to put down 3% stamp duty, so another, say, 30, 40K in stamp duty. So that means that you'd need about 200 to 250K to buy a property for $1 million, getting a loan at 80%. If you went in at 90%, you'd have to put in 150K. If you went in at a 5%, let's say that you were able to find a bank, you were able to get the mortgage insurance, and you were able to purchase this property, that means that you would need to put in at least $100,000 for savings to get into the property. If we were to take up this new scheme, we would see a 40% co-ownership with the government, meaning that you'd only have to get a 2% deposit into the property. A 2% deposit of, say, 600 grand would be $12,000. A 2% of $1 million would be 20 grand. And then if you don't pay your stamp duty, you wouldn't have to pay anything else up front. So that would mean that the people that would be going into a property deal today would only need $20,000 to go and buy that $1 million property. So just think about that for a second, guys. If you could get into a property for $20,000 where it used to cost you $250,000, that means that a lot more people can start accessing to these properties, which would then mean that there would be a supply and demand, which would push up that floor in the market. So fast forwarding and prognosticating, when you overlap these two policies, you have a very big recipe for the next boom to occur in the market. So looking at it, I'm pretty optimistic by it. Would I want to be taking up the government's offer of a no stamp duty up front? If you're going to own the property for a year, 2 years, 3 years, well, then that could be okay. But if your plan is like myself for buy and hold, that would mean that you are now paying an annual land tax on top of your land tax. So you've got council rates, land tax, you've got the stamp duty tax, you've got your own normal tax, your capital gains tax. When are they going to stop taxing you? If you were going to flip a property, it would work in your favor. If you were going to keep it for the next 20, 30, 40, 50 years, intergenerational wealth, this is going to screw you hardcore. So whatever it is, my position, I believe, is now set where I've got a significant amount of properties. So all of these little Ponzi schemes that start coming in the market, it means that people are going to be more enslaved to the debt, more enslaved to the system, more enslaved to trying to get into this market, but all of my assets are going to be rising up, which is the aim of the game, which ultimately, as an investor, I'm very happy by. But a lot of people out there are looking and focusing on interest rates, which is going to be some of my next topics to discuss. But looking at it, there's two new Ponzi scheme stimulus packages that have been announced in the last 48 hours in Sydney. If that rolls out nationally, who knows where this market could go to. Going to go into article number 2 and 3, which is about the electricity. We talked about this multiple times last week, talked about it previously. 6 months ago I did Facebook Lives and webinars about how to get yourself food, access to water, access to power, access to multiple different things. And I saw that we would have a crisis. When it comes to electricity, they think that they can handle the economy. And that last article that I've got today, there's actually a little bit that I highlighted in there, which was about, we'll get to it later, but it's about us allegedly going back under 7% inflation in the start of next year. Of course we will be, because we're heading into a recession with all the measures that they are putting into place. The funny thing is that inflation is hitting everything. It doesn't matter whether it's your food, whether it's your petrol, whether it's you buying a new car, whether it be that you buy new cupboards like behind us here, whether it be that I buy a new glass to have a cup of water from. Whatever it is getting inflated away. Let's assume that I bought this glass last year. I don't even know what glasses are worth. Let's just use a pen as an example. Let's just say that this pen was $2 beforehand, and can they afford to sell this pen for $2 in the future? Problem is that the timber that's on the pen, the labour to manufacture this, the petrol that's gone into oil, that's gone into all the plastic parts of the pen have gone up, the delivery of the pen, the electricity of the pen, everything has gone in to push this up. So this cost of the pen, for them to be able to deliver it to me, would go up from $2 to $3 to $4 to $5. And as we look around us in the market, if power prices go up and petrol prices go up, $2.50 for petrol or diesel at the moment, how much do those trucks on our roads go up in value? If it's costing double the amount to keep the truck on the road, that means that when Woolworths goes and stocks their fridge, that they're going to have to put that cost up further. And then talking about their fridge, when they plug their fridge in, if the power bill's gone up double, that means that they're going to have to charge even more for the goods that they're selling to be able to recover some of the costs and still be in profit territory. So this last week, a lot of interesting things have occurred with power and electricity, and I've gone through a lot. I actually made a webinar yesterday just purely on news articles. So I've gone very in depth on this. Today I'm just going to skim over it because we've touched on it on depth beforehand, and tomorrow's, or maybe today, whenever the podcast comes out, it will be fun for you guys to listen because I go into further detail. But this article here says, furious Anthony Albanese warns energy companies as energy crisis mounts. A furious Albanese has delivered a strict warning to power companies as residents brace for power failures overnight. Residents brace for the worst last night as New South Wales Treasurer and Energy Minister Matt Keane told Sydney residents to reduce energy usage between 5:30 and 8:30. It makes me interesting, right? They're going to say that it's because of Ukraine, because of Corona, because of all these things. But, reality is that last year we've had more electricity going, more consumption when everyone's in their house, they've got their TVs running, their air conditioners going, all that sort of stuff. Why is it occurring right now? And that purely comes down to the cost of the raw materials to run the power plant, whether it's the coal or whether it's the gas that they're using. The raw materials have gone up. Coal has gone up from $100 to $400 in the last sort of 6 months, 12 months. We're seeing inflation in every part of this economy. One thing I've noticed, like I've got about 100 electricity accounts, whether it's, this office, there's 3 offices in the building, there's 3 sets of power, whether it be, the motels, there's generally 2 or 3 sets of power meters in there. I've got probably about 100 different power accounts throughout different companies throughout the country. And what I've realized recently is if you owe someone money, they will sort of, chase you up. You'll be like, fuck, why is this guy stalking me for, right? I've had a lot with tradies over the years. They'll complete a job. I actually had a roof restoration done once, and it was like $1,500, and they did the shittest job. And I went out to look at the property, and they'd just finished, they'd left, and they're like, you need to pay me now. Where am I going to see you? I need to pay you, need to pay you. And I'm like, fuck, man, like, let me at least go and have a look at it. Anyway, this guy tried writing negative reviews until I paid him, which was a sort of extortion. He got his just desserts in the end, but the thing is that you can tell when someone is desperate and they're chasing you for money. What I've realised over the course of the last 6 months is that the power companies are now starting to call, right, 4 times a day because the bill, it may be one day late. I've had lots of text messages. My phone blows up from text messages saying, hey, did you know that your bill is coming up on this date? You can pay for your bill here, etc., etc. I'm realizing that these companies, the energy companies, are going broke. So if the power plants now have been capped. So if we look at, I think it's AEMO or AEMO, which is the governing body for electricity and power providers out there, they have now put a cap, which means that the power plants can't charge. I think in the wholesale market, the price of energy went up to about $1,100. It was at about $100 beforehand per megawatt hour or something, whatever they class the supply of it as a wholesale rate. It was about $100 a megawatt hour, and it flew all the way up to $1,100 or $1,200 a megawatt hour, and it crashed the market. So this AEMO market, which is trading energy credits, collapsed last week, and there's now a cap on it at $300 per megawatt hour, meaning that the retailers, right, so your AGLs and Origin Energies and all those companies, someone is going to go bankrupt here. If the electricity company charges you 5 times the amount for electricity, the consumer will go bankrupt, right? They can't afford to pay for it, then they'll default on their electricity bill. If they don't put it up, it means that the retailer buying off the power plant will go broke. So that needs to be controlled there, so the retailers don't go bankrupt. And then if it's the power plant that is paying too much for coal and they can't make their profit, it means that they would go bankrupt if they can't put their pricing up. The government's now come in and said that you can't put your price up, it's got to be left at this level. And now we've got the power station saying, well, look, we don't have capacity there, and the power grid is starting to fail. We haven't even seen a depression yet, a recession, or anything bad, and we're at the really early days of this thing falling apart. I called that we've been in a depression multiple times over the last few years, probably the last 5 years, and this is not a depression which is, everyone's wearing a potato sack. This is a depression based on hyperinflation, and we are starting to really go into that phase of hyperinflation now, trying to control it the best way they can. And in the past, what they've been able to do is put up interest rates and all that sort of stuff, but we haven't even had a month worth, we've had 2 months, not even 2 months worth of increased interest rates. We've seen the crypto price fall to the lowest point in 3 years, whatever the case may be. The stock market crash, to lows that haven't been seen for the last 2 years or 3 years. Everything is crashing, and we haven't even really had a recession yet. So imagine in 6 months' time what this is going to look like when we've got retail spending down, when we've got people can't afford the decision that they're going to have to make. Do I buy nappies or do I buy formula for a baby? Do I put food in the car, put food in the cupboard to eat, or petrol in the car so I can go to work? Do I pay my rent or pay my electricity bill? These are all problems that the average families are going to have, and it's getting worse and worse every week that goes by. So looking at when you stack all these things together, I reckon there's a period of maybe 6 months, 12 months. I've said 12 to 24 months will be when we start seeing interest rates come down and all that sort of stuff. But we are doomed at this point. We try and remove currency from the system that they've printed, and we'll see a collapse. And we haven't even been 2 months into this, and we're starting to see the power go off. We're starting to see, companies go bankrupt every single week. Revlon went bust this week. So it's a very real problem out there, and a lot of people are worried about, what's going to happen to my interest rates. There's a lot bigger problem that's going to happen to your power prices if you can't feed your family and all that. So, yeah, just looking at this article here, it's from Channel 7 News, much as what you'd want to take from a news outlet. Entire Sydney suburbs plunged into darkness as more power outages loom. The suburbs around Sydney suffered power outages on Monday night as officials warned more blackouts could be on their way. Entire suburbs in Sydney were sent into darkness on Monday night, with concerned more power outages could hit both areas of New South Wales and Queensland in the next 24 hours. Homes in Sydney's north and northern beaches were hit with power outages on Monday night. Homes in Beacon Hill, French's Forest, Narrowena, Cromer, DY are temporary without power, Ausgrid said. So here we are with some of Sydney's most affluent suburbs, and they're not being able to get power. Why? Because who knows why. We can believe what the media has to say, or we can go and look at the charts as to what's happening with the power prices. Here's another article here from Sydney Morning Herald. New South Wales given emergency powers to direct coal companies to provide fuel to electricity generators. So here we start seeing some levels of truth coming through with the wash of media out there. The New South Wales Energy Minister, Matt Kean, has given emergency powers to direct coal companies to provide fuel to electricity generators amid concerns that stockpiles are running dangerously low. Why is the stockpiles running dangerously low? We have a shitload of coal in our country. That's the biggest thing that we have in our country going for ourselves is you go to a regional town and you see the locals walking around. They look like cartoon characters. You know when you see Roadrunner and you go beep beep, right? And then something blows up in their face, like shh, and they've got all the black stuff in their face. When you go to a local country town, it's pretty funny when you see all the miners walking around. They've got all the black stuff on their face because they're in the mining, right? We've got a country that's literally full of coal. We can pull as much of this shit out of the ground as we want, and we are running dangerously low on coal. Crazy. An extraordinary development in New South Wales energy crisis. Keane met with the governor late Thursday to seek the powers which gave him authority to force coal and logistic companies to deliver fuel. A senior government source with knowledge of the situation but not authorised to comment, publicly confirmed precautionary measures were being taken to address concerns that stockpiles of coal are running low at some generators. With the intervention comes as New South Wales confronts energy supply crisis, which saw the Australian energy market operator on Wednesday suspend the East Coast electricity market to restore calm to the increase in the volatile grid. This is not something that's new out there, right? This is new to Australia, but this is not new around the world. We've seen this happen about 6 months ago with UK, with Canada, with US, with India, with all different countries around the world. We have seen this same problem occur. And when you look at it, when did theirs occur? This occurred when interest rates went up in their nations. And now our interest rates are going up and we're now having power outages, right? Because we're on the brink of a massive, massive recession, right? It'll be bigger than any depression that we've seen. But there's only one way that they can fix it, and that's just to print their way through it. When they print their way through it, it will cause hyperinflation. There is no other way out of where we're heading in this current cycle. So, very exciting. I'm so excited by seeing this stuff. It's not exciting for 99% of people out there in the marketplace, but for me, in a sick, twisted, demented sort of way, there's lots of opportunity, and I'm focused on the opportunity and not on the fearful part of it. I was chatting to one of my mates / investors / going to do, he's a tradie and he's going to do some work for me on one of my properties. He's going to replace a floor in the property. He needs to concrete it, and he's planned for it to happen next week and move some jobs around and fit it in for me. And it's a pretty decent size, not too bad, but it's got a few grand worth of concrete being poured into it. And he called up for the concrete company to deliver the concrete, and I'll read you his reply to me today. So where are we? It's pretty funny when I read it, because I'm like, this is a messed up world that we're living in. So he wrote to me, "You will love this one." He's probably watching this right now. He goes, "You'll love this one. So I rang the plant, and there's a national shortage of concrete. They can't get concrete there this Saturday. I have to wait till the week after, blah, blah." The chick said there's a national shortage on cement, right? A national shortage of cement. It's a new one, right? It's a new one. And I think the issues that are being faced out there is people don't want to sell their time for money. People don't want to take money for their goods or services or products, and that is causing high levels of inflation. You've got to pay more to get the same shit. But when the interesting thing will come for everybody that is watching this and for everyone in the world, really in the world and in the country, is that when we start seeing the hyperinflation, that's when people start realizing that they've been lied to from their government, that there's no money that they were told, and we'll start seeing the collapse of services here. And that's exactly what's happening now. So, interesting times. Next article here is from news.com. This was gave to me from my team. Huge myth about interest rate rises debunked as housing affordability to worsen, says report. As interest rates began to rise this year, many Australians thought it may be their chance for a break, but not everything is as it seems. As interest rates begin to rise, we've gone through that, Australians with large home loans were almost the most concerned, but there are also key demographics which were considered to be the winners of the new normal of rising rates. It's funny they just put new normal to everything now. Pensioners with large amount of savings were one, but that was battered by a generation of younger Australians looking to get their foot in the door. Let's assume that you're a pensioner and you haven't got any return, right? You put $1 million in your bank account and you get 0.1%. Let's say that the bank now pays you 1%. Let's say the bank pays you 2%. Let's say the bank pays you 3%, which is more than what the RBA would charge the bank for the money. What would happen when you put your $1 million away, your 100 grand? Let's say you got 100 grand, you put it away, you get 3%. Well, you got 3 grand for the year. You buy a whole lot of dog food to eat in your retirement on that. But what happens at that point when you go to get your $3,000 and you realise that you can't buy what you could last year for your $100,000? Inflation is greater than any of these returns. So they're trying to, make it, sound nice and sound sexy and sound flash, but no one's winning out of this. No one is winning out of it. As we go through to a deflationary period. This is where the article was that I saw from this evil-looking bloke here. They all look quite strange humans when we look at these guys at the central bank. In an interview, he predicted that inflation would hit 7% by Christmas and that it would begin to fall until the first quarter of next year, while the cash rate would hit 2.5%. I think Australians need to be prepared for higher interest rates, Dr. Lowe said. So, inevitably, they are going to be pushing up these interest rates. But, when we look at these companies pushing up their prices already, everything going away with a high inflationary environment, one or two things will occur. Either one, everyone will stop spending, we'll go into deflation, have the biggest recession that we'll ever see. Or two, the flow-on effect will get passed on. And it will be interesting to see what happens over the next 6 months. But if we go to 2.5%, that would be hilarious, right? It would definitely hurt myself. I've got 20 mil worth of debt. Pushing that up by 2.5%, that'd be $500,000 a year extra in cash flow that I need to pay. But it doesn't really bother me, right? Because other factors would come in as far as inflation is concerned. My rents would get inflated away. We're already seeing it, and some of the next articles that I've got to talk about are about, inflation of rents. But let's assume that you're one of these building companies that's struggling, right? There's so many zombie companies out there today. 2 years ago, I said, I'm not buying shares. Everyone's like, oh, share market's going up, get into it, whatever. This is the market that you will see, that these zombie companies that were out there, right? These dormant companies that look like they're good companies, they're household names, they have no revenue, and their costs, well, they're only still alive because they're on dialysis from the government and from the state, i.e. the central banks putting stimulus packages into these companies to keep them alive. So looking at them, if you're a business and you had a bank bill swap rate of 1.1%, let's say 2 months ago, and it goes up by Christmas by 2.5%, that means that your rate would be close to 4%. That means that your business cost of capital would be 4 times higher than what it was at the start of the year. If your business was failing already, how bad is it going to be when you add 4 times the amount of debt, the cost of debt to it? What would happen if those companies go, okay, well, we're not going to absorb all the cost, the higher cost, we may as well just add those costs to the end product. That would mean that the cost of delivery would go up again, the cost of goods would go up, and we'd see even greater inflation in this environment. And that's what I've been sharing with you guys, I think last week or the week before, when we looked at Turkey, and they've had to go, fuck it, we're losing this, let's drop our interest rates and stop our economy from collapsing, which is where we're going to be heading shortly. Next article, this one here is just a very quick one I'll go into. Millions of New South Wales people to cop a big rate rise as councils cite high inflation and global uncertainty. So even the local councils now are getting in on pushing up their council rates. Some of them are going up by 2.5%, some are up by 3%. But when you add all these costs, that just means that everything is going up higher and higher and higher. And, it's got to end somewhere. That'll end up with the loss of our currency. This one here I found was fun. One of my staff had put this in for tonight's talk. Vacant block of land in Bella Vista sells for $2.83 million. I noticed that someone in here has said join tomorrow night's webinar with my mate Ridwan Hannan from One Path Accountants. So my office is located in Bella Vista. Ridwan's office is located in Bella Vista also, and this is our local neighbourhood. If we're in Sydney and we're seeing a very bad market, right, and we're seeing the wheels fall off the cart, which in a lot of areas, I think, there is some pain out there, and it's more fear from, the consumer reading too much doom and gloom out there, which is causing, some markets to be softer than others. But this is our market, and a block of land, it goes on to read, the vacant block of land located in one of Bella Vista's sought-after areas has smashed the suburb record. A vacant block of land, nestled in the quite sought-after alcove within the Hills District, 803 square metres of land sold for $2.83 million, beating out the previous record of 2.7 set in November last year. This sale occurred last weekend. It's June the 20th this year that this got put out. So the previous record has gone up by $13,000. My laptop is giving a frozen screen here, guys, so hopefully it's all okay and we don't have any disruptions here. But the fan's going pretty loud on my laptop. We've got a block of land here. It's gone for an all-time high of $2.83 million. There we go. My computer's working again. We've seen 2 rate hikes, almost 1% increase in 2 months. We've got a block of land in Sydney, right? You think about it, that's not with a house on it, right? How much would it cost to build a house on that property? In the current market, for one of those nice homes, probably $1.5–2 million. You're looking at nearly $5 million for a house on land in Western Sydney, right? So Bella Vista is a nice area. It is where my office is, but once again, you are 10-minute drive down the M7 freeway and you're into sunny Mount Druitt. So, so when you look at it in perspective, is $2.8 million a bargain of the century? Absolutely not, but it is also a new record high for that suburb, even though we're meant to be seeing the biggest crash. And on that note, here's the next article. House prices to drop by 15% in Australia, according to the CBA. Major bankers warn that supersized interest rates will have chilling impact on house prices as potential buyers run scared. House prices set to plunge by 18% in the next 2 years in Sydney and Melbourne, one of the major banks has warned. I remember hearing this from every single media outlet back in February 2020 about house prices allegedly meant to be crashing. So when we look at that and we overlap it with articles like this, there is a big inconsistency out there. By all means, some markets are getting impacted dramatically, some haven't. But it doesn't mean you should be scared. Does it mean that you should go and sell all your properties? We'll get onto that very shortly. This article here is one of my favourite, and Sydney rental vacancies plummet to 16-year low as rents continue to rise. So this goes into some of my things that I'm going to talk about on my next sheet about, why now is a good time to grow your portfolio. But in times like now, you've got less people being able to afford to buy, you've got less competition in the market. A lot of people were expecting or hoping, shit, I wish I could get access to a property beforehand, and you have 10 different buyers fighting over, and the price would go 100 grand over your price that you were going to buy, and you'd be like, shit, you've now got the opportunity. But a lot of people either can't get access to the funding because the interest rates have gone up, and it will lock them out of the market from being able to participate, and other people are too scared, and that will put an impact onto the rental market, which would mean that there would be lower rental vacancies in the markets, and causing a pent-up demand. If we go and look at any part around the country, like we manage thousands of properties throughout this country, and look at that, like wherever the properties are, the rents are on the rise no matter where you look. And when I go and watch similar sort of content, right? When I say similar content, like it could be someone talking about finance in America, it could be someone talking about something to do with an economy in the UK, it could be any other sort of location around the world. All I'm hearing is rents are rising, houses are rising, all that sort of stuff. The conversations that are happening here in Australia, it doesn't mean it's just your neighbourhood, it's happening all around the place. Skyrocketing rents and slim pickings are the two attributes for renters are facing as vacancy hit a 16-year low. So let's go back to a rental vacancy hitting a 16-year low. That means it would have to go back to 2008. All right. If you guys were investing in 2008, you'd remember what happened then. If you weren't investing in 2008, let's have a bit of a deep dive into that. I remember going out in Mount Druitt at the time, and rental prices for a 3-bedroom 5-borough house in Mount Druitt were renting for like 170, 160, 190, 210 per week. It was around that sort of price. Within about a year of 2008, 2009, the rents had gone up to 280, 300, 330, 350, 380, nearly 400. They basically doubled overnight, and then we saw them come back a little bit, and they've been sitting there for the remainder of the last decade. So we're now entering into a rental market where we're starting to see massive inflation hitting the rental market. So if you're an investor, you're holding assets, well, this is the time for them to perform. I quite often hear people go, I bought a property and I sold it 2 years later and it wasn't doing its thing. It's like properties are long term, right? It's a long game. There's nothing sexy about it. There's nothing flash about it. But when you have the fundamentals of it right, these properties, all my properties in the last year, let's say I just put only 100 of them up by $100. 100 properties at $100 is 10 grand a week. That's 500 grand a year. That's happy days. So, if you don't have access to that portfolio, well, then that's where the problem starts happening. So, there's an article about the first home buyer package, which we spoke about beforehand. And I've got some charts and stats here. I can't actually see where it's from, but these are the charts here, right? It says here what's happening to property prices. Sydney has dropped 0.1% from last week, dropped 1% over the last 28 days, and up 10% for the last 12 months. Melbourne prices have dropped 0.6% in the last month, and up still 5.6% over the last 12 months. When we look at Brisbane, the last week they've gone up by 0.3%. Over the last month they've gone up by 0.6%, and up 27% over the last year. And when we look at that, that is what the charts are, right? So there's been no impact wherever it is here over the whole market. But we look at Perth, that's still up by 1% in the last month. This is the last week. 0.1%, 0.4%, 0.3%. We're still seeing growth. This is the last month, right? So yes, Sydney's down, Melbourne's down a little bit, Brisbane is up, Adelaide's up, Perth is up. So has it meant that the whole market's crashed? Absolutely not. The amount of listings is increasing. Lots of. I'll put this data into Birchfeed. So if you're not in Birchfeed, go and get access to Birchfeed, and I'll put all the links in there a little bit later. But most importantly, why is now a good time or a wise time to be looking to invest compared to uh, not investing? I'm going to go through some of your questions, just checking here because my computer's been playing up. I'll answer some of your questions before going in there. Um, so what do we got? Hey Josh, how you doing? Hey Jeff. Uh, Dave, yes, I'm growing the ratty still. I don't know when I'll get rid of it, but one day I'll get rid of it. Um, I have two properties in Bathurst. Best thing that I've ever done. Buying assets that are going up with inflation is the best thing anybody could do, whether it's property or whatever it is. Mark said Labor and Lib both have the same commie policy. Exactly, they're both the feathers of the same bird. If it's the left wing or the right wing, you know, you want to know who the bird is. That's that the wings are attached to. Scott said, "You'll own nothing and be happy." Yes. Just another decoration where the government will own your home and your soul, especially when they take it. Exactly. Um, my car parts from the USA are expensive. Your car parts in the USA, they're expensive because of Ukraine, actually. Yeah, that's sorry to let you know about that. That's because of that, apparently. If I read the news, it's because of that. Um, would we see property prices going down for a while? Still up 11% as compared to the same time last year. Exactly. I've just pulled out the charts. There is glitches in markets. I just did a deal this evening. I'm about to send it out to my investors after Facebook Live tonight. It was a deal that I did for $220,000. There was two of them. I did one for 231 and one for 220. The 221 needs paint and carpet, so it's the same sort of price. But the owner of this property paid $503,000 for the property in 2013. So 9 years ago, someone paid over double for the property. So when I look at, markets being linear, markets going up, markets going down, I'm buying properties in Sydney today cheaper than what they were 2 years ago, cheaper than what they were 5 years ago. I'm buying properties in large regional cities around the country for cheaper than what they were 10 years ago. I'm buying properties in capital cities for cheaper than what they were 10 years ago. That's the sort of market that you need to be looking for, not the ones that have been overinflated because they've been recipients of all these stimulus packages. When you follow where the money is going, and when we look at New South Wales removing stamp duty and access to being able to pay it over years, that's going to cause another boom. When we look at home ownership, 40% owned by the government, that's going to cause another boom. So, yeah, just exciting. What else we've got here? Went furniture shop. Andrew said went furniture shopping at a well-known retailer. Was told once the stock in the warehouse is depleting, the next shipment could almost be doubled in the price. That's what I'm realizing myself. I'm doing some big renos at the moment, and it's becoming more expensive. What is your thought on the Darwin market? I don't have too much of a thought on the Darwin market. I don't, participate in that. Um, I just think there's better value in other markets. Kane asked how to register for tomorrow's webinar. I have a webinar tomorrow. If you would like to register, there is a link in the comment box. You can register for that. Make sure you come along. Very fitting, end of financial year. You get to see me and my mate Ridwan, who's an accountant, chartered accountant, and looks after most of our investors' large property portfolios. Lots of accounting and tax stuff there. So when you go to your accountant, it's really boring when you go to your accountant. Ridwan is a gentleman and he's very knowledgeable and he has a lot of skill set and experience with dealing with large portfolios. He's actually very good at it. So you'll have fun watching that for those of you that turn up. Lydia said, what percentage of purchase cost do you think is best to use to renovate an investment property if you use any? I don't go from what percentage of the property. I go for what return on investment am I going to get. So if I'm doing a reno and I'm spending 10 grand, I want to make sure that I'm getting sort of 25% return on investment. So everyone's thinking, I can go and invest in the Bitcoin. I made a video on this recently, actually. You could get a 50% return on investment. And people would be thinking, how do you get a 50% return on investment? How you get a 50% return on investment is if you own an investment property and you can add value to the property. We're not even talking about the capital growth that you would have from that. But if you're spending 10 grand and you're getting an extra $100 a week, $100 a week times 52 weeks is 5,200 a year. 10 grand, that's 52% return on investment per annum, year in, year out. Plus, you're increasing the value of the property maybe by 10 grand, maybe by 20, maybe by 50K. So I'd be looking at the return on the investment for the reno. If you're going to be spending 20 grand and you get $20 a week, that's $1,000 a year. $1,000 a year on 20 grand. That's like a 5% return. I'd probably find better things to do than get that. Johnny said, properties are a marathon, not a sprint. Exactly. Wade, good evening, gangster. Good evening. Wade, I don't know what to really say about gangster, but I guess I'm a gangster when looking at what I do out there, buying properties and all that. Joe, would you invest in units as I haven't moved in the last 3 years? I invest in all different types of properties. Probably at the start of my portfolio, I was very scared of units, townhouses, and villas, but I quickly realised that they have a lot of value to them. So at one point, my portfolio had zero. At one point, my portfolio had about 70% townhouse units and villas, and today it's probably got about 25% townhouse units and villas in the portfolio. So it's a vehicle for you to get to where you want to be. Pete said, hey, with some economists are saying big four banks could be in trouble if the derivatives markets implode again like 2008. If we have cash and offset loan accounts, are these still considered deposits and could be bailed in to save a bank, or could you prove it's tied to that loan and it's offsetting? Very good point there, right? Like, I think that Australian banks are quite safe, like if you were to look at our banks compared to the rest of the world. However, I do believe that in this next crash that we see, and it's not the property crash, it's the crash of our currency, that we would probably see these loan products being bailed out by the central bank. So the central bank will have to pop in and bail out the banks at that point. By just printing more money. It's inevitable that this is just a start, guys. Like, if you think that inflation's crazy now, if you think that what we're dealing with is crazy, go and look through any other country around the world. It's hyperinflation. What happened to their banks? What happened to currency? You go to the bank and ask for. Someone told me the other day they went to the bank to ask for like $5,000. They were able to get $500 out, and they wouldn't be able to give them any more than $500. And it's like, $500? Are you serious? The ATM gives me more, right? It's my money. If I had $1 million in the bank, I'd be really pissed off that I couldn't get access to that $1 million. So the money, when it goes into the bank, it isn't yours. You are a debtor to the bank and a debtor to the bank. So if something was to go to the bank, you'd be on the creditor list for them to pay you out. At that point. So each bank has a $250,000 allegedly insurance policy attached to it in Australia, meaning that it's an insurance. If the bank was to go bankrupt, then your funds up to 250,000 would be protected. So if it was me, and I never have money in the bank anyway, but if it was me and I had $1 million in the bank, I'd be putting 250 in this bank, 250 in that bank, 250 in the next bank, and so on and so forth, to be able to minimize that risk. And maybe even make it 100 grand across 10 banks instead of 250 in 4 banks. But I definitely wouldn't be having $1 million in the one bank, because I'd want to spread that risk. But anything is possible, and we are living in a very interesting time, and we are seeing the collapse of our currency. The bank deals with our currency. That is the number one part of what the bank's role is there with the currency. So it wouldn't surprise me if a bank did blow up as we start seeing things ramp up in the future. Why are you so passionate in sharing all your knowledge? I don't know. I just share it. People like it. I share it. So I don't know. I could be doing other things on a Tuesday night, but and I did for last year. I wasn't doing Facebook Lives. I was doing just podcasts. But people are saying they want to see this back, and I guess I've got lots of exciting things to see out there. One of the things that I feel very wealthy by today is a community, right? And that's the access to the knowledge of you guys in the community. And I get lots of things sent to me. A lot of people asking me questions. It keeps me on my game, keeps me creative. I guess that's why I get excited by it, because if you go out to the big wide world, there's not many people talking about these sorts of things. So having a community of people that I can communicate with and share and bounce ideas off and strategize is really cool. So Yeah, just on the main topic of today, and I'll probably only keep it into like maybe 10, 15 minutes, but looking at why now is a smart time to grow your portfolio. I guess the first thing, you know, let's assume we'll go into the Easter show or to a fair or to a, somewhere where you get locked into a room, right? So if you go to the Easter show, let's assume that you've got, you know, 5 kids and you're dragging their asses to the Easter show, and you know that when you get there, a can of Coke's going to be $7, $8. If I say $5, $5 is probably cheap for Coke right now, right? Um, and you'd be sitting there going, you wouldn't be sitting there to your kids saying, "Hey, no one eat any food at home. You make sure that your stomachs are empty, so when we get to the Easter show, we can load you up on really crappy food, a bowl of chips for $10, a can of Coke for $10." You wouldn't be doing it, right? You'd be like, "I can load up, eat, make sure you're full. Let's go now," right? So when we look at the property market, I don't understand why people go out and want to buy into a heated market. If we look at Bitcoin, for example, we've got everybody saying let's go and buy Bitcoin when it was $90,000, $80,000. Oh, it's the best thing. It's going to go up to the moon, right? Um, with all the Bitcoin bros out there, right? And then when it's at $2,000, everyone's like, nah, that's shit, it's too risky, whatever the case is. You look at it now, and everyone's like, oh, crypto's falling, it's going to die, it's going to end up in death spiral, and it's going to be worthless. Well, unlike shares, the share could just get delisted, the business could be absolutely worthless. The only reason why Bitcoin would be worthless without having value behind it is if everyone was dead and no one used it, and there'd still be people wanting to communicate with it. So it does have an intrinsic value there. Um, the So looking at the property markets out there, why would someone want to go and get into the property market when it's at a very heated market, right? Now, if people are scared, I love all these news articles. All these news articles, to me, mean that I've got less buyers out there, and that gives the opportunity to create my own fear in the market, to create my own ability to, get prices cheaper when it comes to real estate agents. You don't think when I'm negotiating on a property, right? These things get thrown around all day. Corona, Ukraine, right? When I'm doing deals, right? Oh yeah, it's pretty tough out there. It's pretty tough. I'm not so happy when I'm dealing with them, right? As I would be with you guys. So, looking at the opportunities, that's where the opportunity lays. So I don't want to be buying at the top. Looking at my position when I was, if we go back to the GFC, in 2009, I quit my job. I was 24 years old. I feel old now. Fuck, I'm like 37. But looking at the market then, if I had have waited for that perfect opportunity, if I had have waited for the right time to get started in investing, if I waited till the property market crashed, it never actually crashed. You might have got something 20 grand cheaper, 30 grand cheaper, 50 grand cheaper. But reality is that how long would it take you to build a 10 plus property portfolio? Most people say 10 years, 20 years, whatever. But most people can build on an average wage and an average sort of deposit saving. You could get 10 properties in a period of 2 years or 3 years, right? Let's say it takes you 3 years to get to 10 properties. If we go through a recession now and we were to see properties on the cheap, you know, would you want to wait until 3 years comes or 2 years come and go, I'm going to go buy 10 properties today? The chances of someone going out and buying 10 properties in one day is very slim, right? The reality is that you would need to accumulate over a period of a few years. Would you want to be accumulating over the last few years when prices are rising and you're going into battles with people paying more money and all that sort of stuff? Or would you rather have the ability to go and pick the eyes out of the market and go, cool, I'll take this while it's on sale, I'll take that while it's on sale, and collect all the properties that you need. So looking at it, you need to be realistic about your time frame. If you want to just buy one property and speculate, go be it, right? Wait until the best opportunity, right? But there's no right opportunity for all the stars to align. There's been abilities to do deals for myself for the last 20 years almost, every single year, no matter if it was pre-GFC, during the GFC, after GFC, in the heights of any of these markets. There's always an inner market, an outer market, and somewhere to go and play in. And I couldn't think of anything better than seeing everybody fearful and being able to collect shit while it's on sale. So you've got that opportunity to it. The other aspect of it is the rental market. So I was looking at one of those stories beforehand, 16%, 16-year low on rental vacancy rates, meaning that it's putting an upward pressure onto rents. If you could buy 10 properties and you get $100 a week positive cash flow out of that because you're pushing the rent up by $100, $100 a week times 10 is $1,000 a week. That's 52 grand a year. If you can't keep up with inflation at the moment, well, then having a secondary income would be very important. If you don't like your job, or you don't like, selling your body and having to do a medical procedure like what we've seen in the last few years, well, then you would need somewhere else to find an income from. So no better way than people, you don't have to get out of bed to get paid your rent. You just see it pop through. It's end of month, mid-month, however you get your rental cycle paid. You've got cash flow going through your accounts. So, building up extra streams of income which get adjusted to inflation, right? The reason why rents are going up is because of inflation is going up. So, yeah. Someone just wrote here, looks like someone is a bit upset. Oh wow, look at this. Oh wow, we've got a troll here today. Tino Tapfuma. I hope you're going well, but it sounds like someone's very sad and disgruntled here. Property investment is a scam and so are you, mate. Oh, it sounds so hurtful. I'm so scared I'm not going to sleep tonight. How much is Gina Reinhart paying you to do this live? I don't even need to answer this one. Uh, Daniel just wrote a funny message there. You won't be chatting this much shit when the banks go tits up. Well, fortunate enough for me, I don't have any money. I've got assets, so I won't be too concerned. But you with your savings in there, that might hurt you. Go get a job. Oh, wow. Where are we? Tino, reporting you to Consumer Affairs. Where are your credentials, mate? You don't even have a picture. So we've got a good troll. It's been a while since we've had a troll in here. So it's pretty fun. Thanks a lot for the entertainment tonight. So we've already seen 2 stimulus packages. And it's only been a month, right? We've got stamp duty as being packaged up as a different sort of derivative and a different sort of income stream for the government. And we've seen the co-ownership from the government, right? 2 very dangerous Ponzi schemes, right? Will I be taking up half ownership with the government? Absolutely not. A lot of people will do, and that's fine. They'll be able to buy the other properties in the market and push all the prices up, meaning that the values go up. The second thing, with the no stamp duty and the payment over the years, I would not be taking that option because I'm playing the long game. I don't want to be paying stamp duty till I die, till my kids die, till my grandkids die, and so on and so forth. So those things there will both be Ponzi schemes. Maybe that Tino bloke that sounds like he's got the shits commenting in the section, maybe when he buys a property one day, he would be, the prime candidate to go and get one of these sort of deals. The other thing that I like in this market is valuations, right? So we've had a very good market where prices have been on the rise. There is inconsistencies out there for you to be able to get access to fantastic equity. So if you own a property already, I'd be trying to get as much equity as I can out of it, right? Whether you spend that or not is up to you. But I'd be trying to get as much equity as I can because those valuations may not be the same in 3 months' time, 6 months' time, 12 months' time. So, whilst there's good valuations out there, go and seize the opportunity on that. But within saying that, if you're picking up a property today and the banks are using the valuation from 2 months, 3 months, 4 months ago, that means that you could be having some very good equity as you snag bargains, in the current market. So be mindful of your finance and valuations out there. Being able to get access to lending is a crucial one, because in the future you might sit there and say, well, I'm going to be like Tino here, and obviously a disgruntled loser, and you could be like, okay, I'm going to wait for 5 years down the track and not buy a property, and the market starts taking off and everyone starts running in to get a property, and you may not be able to get a loan for it at that point because you may not have a job, you may not have the deposit, you may not be credit worthy. Something may change with the back end of the banks like it did back in 2016, and it became a lot harder to get loans. So if the opportunity is out there to get lending, you should be looking at going, okay, whilst I can get access to the funds, is it financially viable to be able to go and do that? So, loans are good to get in this sort of market. The um, I guess I'm making fun of this Tino bloke. Let's see if he's writing anything else. uh, there we go. So apparently, this is what the market is, right? This is the market, right, of sad, really, really sad people, right? I just got off the phone to Consumer Affairs, mate. Look, as if I really care. Go call them if that's what you want to do, right? People are killing you in here, mate. You sound like an idiot. Go and watch Home and Away or something that's more fun for you. But he said that I'll report you to the ATO for illegally negative gearing. I don't even negative gearing. That's why you're broke. Um, but people like that would be sitting out there. How many people do you know that's like, I don't want to be buying a property in 2022, right? 2020. There's so many people that got scared from the start of Corona. They didn't buy anything. They're like, the market's in a big Ponzi scheme. It's gone up in a big bubble. I'm going to wait for it to crash. But it never crashed in 2020. So the people that were going to buy in 2020, they never bought in 2020, right? They're still sitting there thinking, I'm going to buy in 2023 when the market crashes. Well, when the market doesn't crash and they make two more Ponzi schemes, such as, those two stimulus packages, they're just two stimulus packages this week that have been talked about. We've now got more job keepers, more job savers, more job makers, training programs, all different things that are going to be implemented over the next 12, 24 months, which are going to push up the market dramatically and cause us to go into the next high level of inflation. So be mindful of that. And the last thing is, like, obviously the rents. Like, we touched on the rents beforehand, but if people can't afford to buy, like Tino here, if people can't afford to buy because prices are too high or the interest rates are too high or whatever the case may be, they're going to be forced into this rental market forever, right? The people that bought 20 years ago, they got into a better deal. But they didn't really get into a better deal because they were paying 10% interest rates and all those sorts of things. But the later you build your portfolio, the later you get into the market, the more Ponzi schemes that are being created. You'll be buying a property with a 20% equity and the government gets an 80% equity in the next decade, right? The Ponzi schemes are getting bigger and it's pushing more people to the rental market. Those that hold the rental properties are going to see higher cash flow. There's going to be higher rent. So we're going to see rent increases, stimulus packages making, capital increases. If you are wanting to build a portfolio and you are serious about your wealth, well, then you first need a game plan to be able to accumulate the assets. But once you've got that game plan, you need to go out there and actually buy the property, settle them, pull out the equity, do whatever you need to do. If that takes you 3 years, by the next 3 years, we're going to be ready for the next boom cycle, whichever's coming through. So, a lot of people will be fearful, right? In these sort of times, and that's great. That leaves you opportunity. There's a saying of in tough times, you realize who's got strong hands. The money doesn't disappear and evaporate. It goes. The assets are still there, right? Whether they're worth $1 or $1 million, whatever the case may be, they've just been a transition of wealth. Some hands are strong; they never sell. Some hands are weak, and they're like, "Oh, I'm too scared," and they'll go and sell the thing or whatever the case may be. And I guess that's what you need to decide, whether you're going to get caught up in hype. Right, the last 2 years, all these articles have been about hype. We're not in that hype phase anymore. We're in negativity, right? Use that negativity as your advantage to be able to go and accumulate wealth, accumulate assets, and take it through that next cycle. So have a plan, have a strategy, and don't forget to take action. So on that note, I think that we should. Oh, what do we got here in the messages? Everyone puts up your rent. Everyone put up your rents tonight. One of us will get Tino where it hurts. I'm actually going to smash up a like on that one too. Um, where are we? Uh, where are we? Here we go. Tell me what the mate the irony isn't lost on me. Show me your 21 to 22 tax statement and I'll maybe take you seriously. Well, you've probably done your tax, right? For me, I'm not doing my tax right now because I'll pay my tax when it's devalued currency. So I don't know why that means that you've got a bigger one than I've got, right? If you really want to see who's better, let's go to the urinals, mate, and we'll stand beside each other. Anyway, I like having fun when there's a sad sort of troll on the internet. Um, but on that note, I really enjoy these Facebook Lives. Someone said, "Why do I do this for?" When I read the comments, I see the community, the interaction with the community. There's a lot of wealth of knowledge out there, right? And a lot of people, unfortunately, don't have access to that knowledge. They're, buying into the news or what their favorite idol on TV has to say, and not taking knowledge and decisions based on their own lives. And you guys are kicking ass with what you're doing, and I encourage you to keep doing whatever that is, whether it's selling, whether it's buying, whether it's renting, whatever you're doing. Just keep working towards your better position. Where is it that you're heading? My goals never change. Well, they do change. I just keep growing and expanding upon them. But none of the things from a market perspective, markets will come, markets will go, seasons will be here, seasons won't be here. There's good seasons when it's hot. There's good seasons when it's cold. You don't have snow in summer. You don't have the beach in winter. But that's the fun thing about different cycles. And this is a cycle, right? And we're going through a different market, and there's lots of cool opportunity out there. And that's, I wouldn't have been able to retire at the age of 24 in 2009 in the middle of the GFC if I didn't have a dozen, 2 dozen properties at that point. I wouldn't be able to sit here and share my knowledge if it wasn't for all the exciting things that I've seen over the years. This market is an exciting market. We'll look back in 3 years' time, 5 years' time. This video will age, right? In some way, I will age, you'll age, the video will age, and looking back into today's issues that we see out there, we'll be laughing because we'll be like, remember when they were scared about this? Remember when this was happening? Remember when that was happening? There's probably going to be a bigger, scarier problem that'll face us all in the future, whether it's based around climate, whether it be based around our economy, whether we go into a hyperinflation. And I really am excited to see the hyperinflation, but a lot of people will not be excited by the hyperinflation because they will not be able to afford to basically eat. So make sure that you're doing the right steps. If you need help with anything, you know where to find us. Send us a message. Give us a buzz, 1-300-367-925. Click on the link. If you don't know where to, if you're trying to build the right strategy, if you're trying to work out whether you should buy or sell or refinance or whatever it is, I've got like 100 staff here in my headquarters that are all experts in their relevant field. Reach out to my team. There is a link where you can book in a discovery session to have a discussion with someone and be put in contact with the right experts for what you're trying to do. Click on the link on the side of the screen. And if you like what I do, smash up the likes, share it with your friends and family. And also make sure that you subscribe to tomorrow night's webinar. The link is also in the description. It is a very private invite sort of only one, so you must click on the link and register for it. It won't be published on YouTube or Facebook or anything like that. With it, make sure you subscribe. I'll see you tomorrow night, and keep being awesome, and I'll see you next Tuesday. Anyway, awesome. Bye for now.